Hello everybody, this is the quarterly chart of gold, and many traders and investors believe and think that this exponential move, that's a one-off move and we're done. But actually, I can tell you with a strong conviction and my trader belief that this is not over. We're going to see a secondary exponential rise of that sort. But first, you actually have to switch your charts to a log chart. Let's just do that. You can only analyze in today's exponential markets on a log chart. Second, well, you have to bring in the lines. Now, these are the lines. What is special? Well, in gold, we had the 1980 high here. I was a kid. I really remember that. And then we have the high here in 2011. This did not break the 2080 high. It tested it, and that means that we have got two active stop run levels still. This one from back here and this one from here, and that's a very strong level, cluster level. And if these level break, well, we get big moves, and that's actually what we got here. Plus, we had some other levels forming, but let's not get too much into detail here. Now, after this 2011 high, there was a pullback. That was quite painful for a lot of gold investors who thought, oh, this last high broke. Now we're going to new highs. It didn't happen. It was a long stretch. Well, this long stretch is something that we really know really well. That's a multi-bar S2 turtle pattern, and it nicely developed here. I remember as well here back then that people were talking about, oh, gold is of the past. It will go to zero. And well, that was basically the low. Now this, I call this trade, that was in July 2019 based on a turtle pattern. And from here, it developed quite nicely. But it took some time to take out these high stop run levels are resistance levels, and they once they fall, they create a strong follow through. Well, this is the quarterly chart. In order to get a clear picture, we have to look at the other time frames, and this is our 4-chart layout we use for trading the futures markets. Now, one time frame lower is the monthly chart, and on the monthly chart, this is basically this consolidation here. And if we zoom in on a monthly, we can actually see, well, that's another multi-bar pattern we know really well. That's an S1 Gecko pattern, followed by another S1 Gecko pattern. Well, that was one time frame lower on the weekly chart. So what we have here is we've got a pattern, followed by a pattern, followed by a pattern. We've got a cluster of 3 patterns, and each pattern adds energy into the system. And we need energy in order to break these stop run levels. And once they break, all this energy that was stored in here of many years, right, of trader and investor frustration got released. This is the stop run move, basically coming out of the patterns, and it nicely hit the target. Now, is it that? Is this over? Is this the move? No. What we see here, it's a healthy pullback. After stop run move, we got a pullback, and that's a healthy one, back to the 21 moving average on the monthly chart. And if you look at it, that's only a shallow pullback after such an exponential rise. And what we see as well on the daily chart, well, we have a multi-bar, again, a multi-bar consolidation pattern. And that gives us the conviction. It's actually the same pattern than this one, although it looks quite different. Well, there are nuances to it. They have their own personality. Now, if this rebreaks, this is basically the signal for a second leg, exponential up leg of that sort. That should drive gold to well beyond the 10,000 level. Trading the futures markets, going from 4,000 to 10,000, 12,000, well, that's quite a move, right? Because it's leveraged. Now, we haven't seen yet a test bar here on the daily chart. So and as time passes by, we actually think that this might have evolved into a weekly chart pattern, and we would still need a test bar and then a rebreak. But this could as well morph into an S2 pattern. S2 patterns are harmonic patterns. They take longer to develop. So from an S2 pattern perspective, this is a low, and it needs an equal time to develop. Let's just have a look at that. So if this is the lowest low, it needs an equal time to develop. So we would need another higher low, probably another higher low, and then we need the sell-off, shaking off the weak hands. That's our test bar and a rebreak, and that's basically our entry signal. So I'm quite confident that either system 1 or system 2 will play out. That would get basically disqualified. If we break to a new low, then we have to analyze this again. But for the time being, our target is actually already defined, which is up here above the $10,000 level, which is basically which is basically a measured move. A measured move that leads to the pattern. So silver looks very similar. Silver is more volatile, can give you more opportunities, and copper, I've linked an article with copper below, is as well. It's a chart that is clustered with patterns, very similar to what we saw here, one pattern after another one after another one, and copper is our pick of the year. Whether it will develop this year or next year, we have to see, but I'm very bullish basically on all metals. I'm very bullish on all energies. I'm bullish on US equities. And once we find a bottom in the cryptocurrencies, well, mainly Bitcoin because it leads the market, then I'm very bullish on cryptocurrencies as well. Basically, all assets, all hard assets for the next decade will do really well, including stocks and including cryptocurrencies.